Welcome back to the Opportunity Zone, guys. Today's Tuesday, July 7th. I am running solo today because my business partner and co-CEO is riding on a plane right now to get up to Maine. We've got a whole bunch of clients, investors that we're meeting at a retreat. And so Chris is en route right now to join me up here in Maine. And so I'm offsite as well. But we've got a lot to cover today, guys. So first and foremost, the Fed has a working paper right now that just published that said that house prices increased by 30% and rent prices increased by 20% because of the illegal immigration wave. I'm going to break down what that means. Most importantly, if you are thinking about or you are currently investing in multifamily, if you're thinking about it or you're presently investing, you have to know what that paper says. I'm going to get into that in just a little bit. I'm also going to get into the biggest struggle for staffing on multifamily properties. And it's consistent across the board. I'm going to cover that. I'm going to cover some of the solutions for that today. And then the $10.2 billion fund that just got raised, where is the smart money flowing right now? Where are they putting that money? We're going to cover all that and more on today's Opportunity Zone. So first, we start this show with a blessing each week. I'm going to read a proverb, then do the blessing. The proverb this week is 12:1, and it says, "To learn, you must have discipline. It's stupid to hate correction." I tell my boys all the time that feedback is a gift, especially if it's coming from a good source. Dear Lord, thank you for this opportunity just to share wisdom and knowledge. I ask that all the words that come forth in this show really help somebody this week, really just put a blessing out there in front of someone as they're on their journey to invest into multifamily real estate. In your name we pray. Amen. Okay, first and foremost, I want to give some perspective on this now. The Federal Reserve, they have a working, just got published, and it's suggesting that the illegal immigration wave caused a 30% increase for home prices. Okay, now more importantly, at least for folks that are investing in multifamily real estate, you got to dissect this part. And it said that it also, that illegal immigration wave accounted for 20% rent increases. Okay. Now, why is this important? Well, if you are in the multifamily game right now, or if you're trying to find a single family house, you know that everything got inflated. And then when this illegal immigration wave was stopped, when the border essentially was closed, for lack of better terms, all of a sudden, all of that push for demand, it just dried up. It went away overnight. And so rent started softening, rent started deflating. And this has caused something right now that I believe is the greatest buying opportunity that I've seen, at least since 2010. And I want to show it with actual data. And so I'm going to put up this slide. This slide shows where we're at right now since 2022. 2022 is pretty much the peak of multifamily pricing. This graph right here shows the pricing for multifamily. And you can see we kind of peaked out 2022. And if you fast forward over to the far right side, 2026, we came down, we bounced on bottom, and that's where we've been now for a year and a half, 2 years, depending on the zip code or the market that we're talking about. So these policies, the open border policy, they may very well have affected pricing. They may very well have affected occupancy. They may have driven up the whole thing. And so this working paper that's going through right now, it could be it. Now, I'm going to also kind of shed light on the market for the last 25, 26 years now. And so I want you to see multifamily has had two dips in a 26-year period. One time was around 2009, 2010, stretched out to 2012 in some zip codes. And then the second time was right now. This doesn't happen very often. Normally we have a nice northeast direction, meaning it goes up to the right. It's going up generally over time with multifamily, but only two times in a 26-year run do we see that it dropped. And so this makes one of the really nice buying opportunities. I'm going to get into a little bit more of that in just a bit on how that mechanism worked. Okay. So U.S. immigration, it's definitely shaping the landscape, or it definitely did shape the landscape for a little bit for multifamily housing. Now, the next big challenge that multifamily operators are facing, and I don't know if this is a direct correlation or not to the border closing, but maintenance staffing. Maintenance staffing. This article goes on to basically explain what different operators are doing and how they're struggling to fill that maintenance position. And I want to offer some insight for those of you that are trying to fill that position right now. We have a couple of different businesses. Multifamily is our primary, but we've also got another business that has this same type of personnel that works at it in the Midwest, doing machining. And to find the person that wants to work in a skilled trade with their hands, it's not the same as it was 20 years ago or 30 years ago. And so what we've done is we've gotten really competitive. We've rolled out the benefit package, the 401k, the IRA, or one or the other. Nice benefits, no cutting corners of any single kind. And what we found, we actually have a whole maintenance crew, 9 guys at one of our properties right now. And we're switching property management companies, and all 9 for 9, want to stay with us. That's a huge statement. Some of them have been with this particular property management company, the big national brand, for a long time, but in this transition, they want to stay with us. Why? Well, the medical, the dental, the vision, the 401k, or the IRA, those are awesome. But what it also comes down to is leadership. I was actually on a call with some of the maintenance guys a week or so ago, and they were mad at the manager that we're leaving. And one of them was particularly mad because he got shorted his overtime hours. And so while I'm on the call, my business partner brought up overtime. We always pay for overtime. A simple little thing like that, it makes a world of difference to the guys that are working on the property. They have to know that you've got their back, that you're covering them, providing the right tools for the guys. These are the little things that make the difference. So if you're struggling right now or worried about maintenance positions, know that it can be overcome. You just have to be the right leadership group. You have to bring the right thing to the table for these guys to want to stay. Okay. Next, this is one more headwind that multifamily has right now that's causing that dip. I'm going to explain that dip more in just a second. But household formation right now is on a relatively low streak. A lot of people are waiting to have kids. They're not getting married as fast as they used to, and they're not having kids as fast as they used to. And so it's causing more people to delay getting places of their own, multifamily housing, et cetera, these apartment units. And so it's another headwind that the whole multifamily market is facing. Now, interestingly with this, there's one other headwind that multifamily faced. And I want to explain this because it's just about to unlock. If you understand this next part, this will literally change everything for your investing. Multifamily pricing is driven by a couple of factors. The main one is NOI, net operating income. When your rents go up, really simple formula, when your rents go up and you're making more money on a property, the value of your property goes up. It's not like single family houses that are driven by what the neighbor sells there for in market valuation. Instead, it's driven off of the net income of the property. So when you're pushing your rents up, usually you're pushing the value of your property up as well. Another thing that affects the net income on the property is how much are you paying for your expenses? How much does your taxes cost, your insurance cost? Things like that have driven up over time. So it was shrinking the amount of net operating income. The secondary factor is debt. Okay. If you can go get a loan, and what you're looking at on the screen right now, this is the Federal Reserve Fed funds rate. This is what they set the market at. When you hear about these folks over at the Federal Reserve that are coming out and saying, hey, interest rates are going to stay or they're going to go up, this is what they're doing. It's the Federal Reserve rate. This does not mean that it's directly the rate that you're going to pay for your loan payment on your investment property, but there's a correlation. Typically, the market for apartments will eventually follow what the Fed's doing. Typically, it's not always the case, but typically. Now, I want to show the correlation here side by side. You can see that during COVID, 2022, they started cranking the rates up. That's the stair-step effect. Literally, that's the fastest that they've ever increased rates in history. Okay, they cranked it up. And then it kind of leveled off. And since then, it's been coming down slowly. Okay, now fast forward a little bit. Here's what happened to multifamily sales. Okay, multifamily sales in 2021 and 2022, they were through the roof each of those 2 years. When rates went up, it killed sales. All of a sudden in 2023, we have a sharp drop off, and we're still in that drop off period. It'll make more sense when I do this overlay. So, this overlay is the Fed funds rates, that's this stair step effect with multifamily sales. Look, when these rates went up, it absolutely crushed sales. You can see it all the way went down to the floor. And we're still living in this slump right now. Now, what's interesting, this is where I get really excited, is you're seeing the big heavy hitters, the titans of multifamily right now are now saying, holy cow, because of this, now it's time to step in and buy that dip. So this dip right here that I'm talking about, this down period that we're in right here, boom, right here, you can see it there, or right here on this side, on the far right-hand side, that dip, Starwood just announced that they're coming in right now with a 10.2 billion, not million, but a billion-dollar fund for opportunistic real estate. And they're diversifying a little bit, but a huge concentration of this is their residential, their multifamily. And they're specifically going after the distressed stuff, the stuff that is being sold at a discount right now. And let me tell you, you can get major discounts because of what we're talking about here. When you can buy a dip like this, I'll put it back on the screen. This dip is said to be at least 20% below peak. And in some markets, like we just got one in Atlanta that literally we got a 43% discount on it. 43%. That's massive. And so smart money is buying the dip. That's why Starwood was able to raise $10.2 billion. It felt like the snap of a finger. Literally, they put this offering out and all of a sudden they filled the whole thing up. Bam, just like that, because they have a whole bunch of institutional money that chase this opportunity. And so smart money is flowing here very, very strongly right now. Okay. Guys, if you are an accredited investor and you're looking for like, how do I and where should I be placing my money right now? I don't have a deal that I'm going to put in front of you right now, but I do have something that I believe you should attend next week. We are having a webinar next week that many accredited investors are coming to learn how to stop paying the IRS or overpaying the IRS. Okay. Yes, there's taxes, but yes, there's also a way using what we currently have in the IRS tax code through the big, beautiful bill to literally reduce or potentially eliminate what you're paying the IRS right now. And you do it via investing in multifamily real estate the right way. We're going to break it down. We're literally going to go through it step by step on this webinar next week. If you'd like to attend this, then go into the comment section now and just put tax, 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 and our team will hook you up with a link for it. We'll make sure that you get a spot for it, but put the word tax down in the comment section and we'll get you on this webinar next week. All right, guys, short and sweet today. That's it for the show. Mr. Lavin will be back with me again next week so we can continue to have our longer segments. And then those of you that are an accredited investor and you're looking to stop overpaying the IRS, make sure you attend the webinar with us next week by commenting the word tax down in the comments below. I'm going to go get ready now. We got a whole bunch of people. We got 30 plus people coming up to Maine right now. And we're going to have some fun with them at this retreat and teach a lot of generational wealth building, a lot of things around trusts, and a lot of things on how you go the most tax efficient life that we're going to be covering while we're up here in Maine. So it's going to be a blast. And there's a surprise we're taking them on tomorrow too. So we're going to have a lot of fun. All right. Thanks, guys. We'll see you next week. Bye-bye.